In this video, I'm going to be sharing a strategy a close friend of mine showed me. He's been using this strategy for over 2 years now to consistently make over $100 per day trading binary options. When he showed me his system, I was honestly blown away by how simple, straightforward, and logical his strategy is. I asked him if I could share his strategy to the public and he was all for it. I just had to make a video on this because it seriously blew me away. This strategy is simple, clean, and easy to follow. No complicated indicators or cluttered charts. By the end of this video, you'll be shocked by how effective it is. Let's jump right in. Before we continue with the video, I want to invite you to join my VIP binary option signals room for absolutely free. I post 5 signals every day from Monday to Friday with a consistent win rate over 75% and a proven track record. Simply click the link in the description below, which will direct you to my Telegram. Send me a message and I will personally add you to my VIP group. I'm here to help you increase your profits and minimize losses. Try my signals today. You won't regret it. So, you read the title, which means you already know this is a simple 1 candle strategy on the 1 hour time frame that can help you make over $100 a day. Yeah, you heard that right. So let me go ahead and break it down to show you exactly how it works. Now, just to mention, I'm currently using the TradingView platform because it makes it much easier to demonstrate this strategy in detail. I'll be breaking down the fundamentals so you fully understand how it works. Then we'll switch back over to the Pocket Option platform where I'll place live trades to show you just how unreal this strategy really is. So definitely stick around for that. To kickstart things, we are on the 1 hour time frame and we're on the GBP USD pair, and each candle here represents 1 hour. What we need to do now is identify the current trend in the market. What is market structure doing? Well, if we look to the left, you'll see that we got a market structure break right here. So now we know that market structure is bullish. Okay, price is most likely going to create higher highs and higher lows, just like this. When it comes to trading this strategy, it's very important that you do not trade in a ranging market. You want to be trading in a trending market at all times. I'm currently showing you guys an example in a bullish market, which essentially means we're looking for buys, but that also means we'll be taking a look at a bearish example a little bit later. So we've identified that market structure is bullish. We're in an uptrend, which means we can push this aside, check it off the list, and we can move on to the next step. In a bullish market, the price creates higher highs and higher lows. So swing highs and swing lows. Right here, we've got a swing high and then we've got a swing low. Because we're in a bullish market, what we need to do is identify the beginning of a new swing high. And that's exactly what we have right here. So if we zoom in a little closer here, you'll notice that this right here is the swing low. Now the closure of this green candle right here has initiated the beginning of the new swing high, followed by a bullish engulfing candle, which is extra confirmation that the price is most likely going to break these highs right here. Relying on this candle alone for the beginning of an upswing is extremely risky. So the formation of this bullish engulfing candle is our confirmation that the price is most likely going to continue going up and not down from here. So if you want to get in at the beginning of a swing high, first, you want to identify the swing low, which we have right here. Then you want to see 2 consecutive green candles form, like in this example, and ideally you want them to be 2 strong bullish candles like we have here. Once that second green candle has formed, we're going to go ahead and highlight the candle. Now you can highlight the candle with a rectangle or with trend lines. I prefer a rectangle. Now you're not going to highlight the entire candle. Because this is a bullish candle, we're going to be highlighting the top of the body of the candle, not the wick, the top of the body, just like that. And we're going to highlight it and drag it all the way down to the bottom of the candle, including the lower wick. Okay. Now, some bullish candles don't have lower wicks, but this one does. So we'll be dragging it all the way down to the bottom of the candle. So again, you want to highlight the top of the body of the candle, not the upper wick, the top of the body, and you want to drag it all the way down to the bottom of the candle. Now we're going to use this area right here to identify potential setups on a lower time frame. So essentially we're going to wait for some sort of pullback into the zone and a push back to the upside. Okay, so we have our area marked out here, and what I've done is I've switched over to the 1 minute time frame. This is the time frame we're going to use to look for potential buy setups. We're going to wait for a pullback into this area and ideally find a setup within this area before the price continues to go back up. To help us identify great buying opportunities, I've added the smooth moving average indicator to my chart, the SMA. I've set the length to 15 and the color of the moving average to orange, but you can of course change the color of the moving average to whatever color you'd like. To identify a valid buying opportunity, we need to see a pullback deeper into this white block, and then we need to see a break and candle close above the moving average. So if we let things play out, as you can see right here, we got the break we were looking for. So if we zoom in here real quick, you'll notice that we got the break within this white area here. Keep in mind, if the price breaks above the moving average, above or below the white zone, it's an invalid setup. I mean, if we take this example right here, zoom in here real quick, you'll notice that the price broke above the moving average here, but the price was above the white zone, making this an invalid setup. Another thing to keep in mind is if the price breaks below the white area, scrap the setup. It's done. It's finished. And if you don't find a buy setup within the next hour, so the new hourly candle forming, you can also scrap the setup. In this case, the price broke above the moving average 27 minutes into the new hour. As you can see right here, a dragonfly doji candle formed here, which is always a bullish sign, followed by a stronger bullish candle. Now, I probably would have entered here, but you could have entered on this dragonfly doji candle here. Once you get that moving average break, you want to wait for some sort of rejection candle or bullish engulfing candle to form, which tells you the price is most likely going to continue going up. Not only does this give you extra confluence, but it gives you more confidence that the price is going to continue going up. Now that we've got that break on the candle close right here, we can look to open a buy position. When it comes to opening trades, you want to look at opening trades anywhere between 10 and 20 minutes. It doesn't have to be a specific time. In this case right here, I would have gone with a 15-minute buy position. If we open a 15-minute buy position 28 minutes into the new hour, we're going to need to see the price close above 1.24094 at 43 minutes. So let's see how this one pans out. Sheesh, what a fucking trade. Look at that pump, man. So we got in at 28 minutes at 1.24094. And the trade closed at 43 minutes at 1.24226. Crazy, man. That's a 132 point pump. Insane. This was a damn fine trade. I personally didn't take this trade, but regardless, it's still a beautiful bullish setup. This is the perfect example of the setups you can spot in a bullish market and the kinds of profitable moves you can capitalize on. Next up, we're going to take a look at a bearish example. We are back on the 1 hour time frame and we're taking a look at the USD JPY pair. First things first, we need to identify market structure. What is market structure telling us? Well, we clearly got a break of structure right here, a break of this higher low, which means we got a market structure shift. So we are now in a downtrend, with the price forming lower lows and lower highs. So we can confirm that we're in a bearish market, so we can check that off the list. Next, we need to identify the beginning of a new swing low. Right here, we can identify a swing high. And right here, you can see 2 consecutive red candles have formed, which means this is likely the beginning of a new swing low. The closure of this bearish engulfing candle has initiated the beginning of a new swing low. After the bearish engulfing candle formed, the following candle closed red, which is a confirmation that the price is most likely going to break below this low, forming a new swing low. So it's very important that we see 2 consecutive red candles form, which is confirmation to us that the price is most likely going to continue going down. Once that second red candle has formed, we're going to go ahead and highlight the candle. So I'm going to take my rectangle, and what you're going to do is highlight the bottom of the body of the candle, not the lower wick, the bottom of the body, and you're going to drag it all the way to the top of the candle. Now this candle has an upper wick, Not every single red candle will have an upper wick, but regardless, you want to drag it to the top of the candle. So once again, you're going to want to highlight the bottom of the body of the candle, not the lower wick. Some red candles will have lower wicks, some won't. The bottom of the body, and you're going to want to drag it all the way to the top of the candle, whether the candle has an upper wick or not. Now we're going to make use of this area to identify potential setups on the 1 minute time frame. Ideally, we're going to wait for a pullback into this area, hopefully find a decent setup before the price continues to go back down. So I've switched over to the 1 minute time frame. Let's see if we can find any decent selling opportunities. What we're actually looking for is the price to push further into this highlighted area we have here, identify some sort of selling opportunity to catch a nice move to the downside. I went ahead and activated the 15 smooth moving average, which will allow us to identify any sort of selling opportunities within this highlighted area. For a sell setup to be valid, we're looking for the price to push further into this zone we have highlighted here. And what we're looking for is the price to break and close below this moving average. You're looking for that moving average break within this zone, not above it or below it. If the price breaks below the moving average below this zone, the setup is invalid. If the price pushes above this area we have highlighted here, scrap the setup. And just another reminder, if you don't find a setup within the next hour, this whole scenario is invalid. The setup has failed, which means you should move on and find a new setup. And there you have it, we've got a break below the moving average within the zone. Now I know what you're thinking, the price didn't push further into the zone. Instead, what happened was the price took out these lows down here, went all the way back up into the zone and broke below the moving average. This is still a valid selling opportunity because we got a candle close below the moving average within our highlighted zone. And keep in mind, all of this played out within the hour. So we got that candle close below the moving average within the zone, which means we can look for sells right about here. Like I mentioned previously in the bullish example, once you get that moving average break, you can either wait for a rejection candle or an engulfing candle to form for extra confirmation. Now, this candle that closed below the moving average right here is enough for me to enter a sell position. On the other hand, some people might wait for a bearish engulfing candle to form like this before entering a sell position. I myself like to get in early on the break of the moving average so that I don't miss out on any significant moves such as this one. And a move like this can be the major difference between you winning and losing the trade. Okay, so on the close of this bearish engulfing candle, I'm going to go ahead and open a 20-minute sell position at 152.580. If we open a 20-minute sell position right here, that's 22 minutes into the hour, which means the trade will close at 42 minutes. So essentially, we need the trade to close below 152.580 after 20 minutes. Let's play things out and see what happens. And there it is, another banger. We obviously opened the trade 22 minutes into the session at 152.580. 20 minutes later, the trade closed at 42 minutes at 152.503, which means we won the trade by a negative 77 points. Now, I'm not gonna lie, this was a bit of a nervy trade because once we'd locked in a sell position right here, the price proceeded to push back up and actually swept these highs right here. But as soon as I saw the highs were swept, I knew the price was going to reverse and continue going down, which it did. And we ended up winning the trade fair and square. Now, I'm sure some of you have spotted this moving average break right here, wondering whether this is a valid selling opportunity or not. And the answer is no, because the price broke and closed below the moving average outside of the zone, making this an invalid selling opportunity. This was another top setup that played out beautifully. From the planning to the execution, simply superb. These are the high quality setups you can spot in a bearish market. By following the rules and fundamentals of this strategy, you'll consistently find A+ opportunities. And that's the strategy, guys. Unbelievably simple and easily one of the most straightforward strategies I've ever come across. I broke it down with both bullish and bearish examples, showing you exactly how it works, what to look for, and how to trade it effectively. Now that you understand the ins and outs, it's time to put it to the test in the live market. Okay, so this is a completely different recording session. We're back on the pocket option platform, as you can see. Like I promised you guys at the beginning of this video, I'm going to trade live using this strategy to show you how truly brilliant this strategy is. So yeah, I'm looking forward to it. It's the beginning of a new hour and we've identified a setup right here on USD JPY. As you can see, USD JPY is in a downtrend with the price forming lower lows and lower highs. So we can confirm that this is bearish market structure. And because this is bearish market structure, we're going to focus on opening sell positions. And if we zoom in here real quick, you'll notice that we have a swing high right here. And then we have two consecutive red candles which have formed, which means this is most likely the start of a new swing low. So I'm going to go ahead and highlight the second red candle from the bottom of the body of the candle all the way to the top of the candle, just like that. And we're going to make the color of the candle white just so that it is easier to see. This is the zone that we're going to be working with. So now we're going to hop over to the 1 minute time frame to identify some sort of sell setup. Ideally, what we're looking for is a pullback deeper into the zone and then a candle closure below the moving average in the zone. This must all happen within the next hour. If the price breaks above the zone, we scrap the setup. And if we get a candle closure below the moving average, below the zone, that is an invalid sell setup. So let's see if we get that pullback and candle closure below the moving average within the zone. As you can see, we finally got that candle closure below the moving average. So I went ahead and locked in a 20-minute sell position, which, listen, it took about 50 minutes for us to get that closure below the moving average. It took a while, but it happened. We got the closure within the zone. And it happened within the hour. So this is a valid sell setup. The ROI is pretty decent on USD JPY at the moment. It's 92%. So if we do win this trade, we will end up walking away with $920 in profit. Listen, this is a top setup, right? Within the first few minutes of the new hour, the price dropped below the zone before pushing back up real deep into that zone, which is exactly what we wanted to see. And then finally, we got that candle closure below the moving average, which was our confirmation to go ahead and lock in a 20-minute sell position. So let's see how this one pans out. We opened the trade at 12:51, which means the trade will close at 13:11. So at 13:11, we will know if we nailed this trade or not. Bang. What a fucking trade. A monster drop on USD JPY. And this is live, baby. This is what we live for. A beautiful winning trade, and that's $920 in the bag. Thank you very much. This is my first trade of the day, actually, and we cleaned out. The moment we locked in that sell position, I had all the confidence in the world that this was going to be a winning trade. Remember, top setups will reward you with winning trades. The first 10 minutes of this trade was pure consolidation. Then around 1300 hours, New York session kicked in, and then you'll notice the last 10 minutes, we see a strong bearish move driving the price down. It actually looks like the price dropped more than 250 points in this move. Unreal. And we caught this one live, you know. So let's recap on this trade real quick. We're back on the 1 hour time frame, and we can obviously identify bearish market structure, which means we're automatically looking for sells. Right here, two consecutive red candles formed after the swing high, which is a confirmation to us that a swing low is forming. So we proceeded to highlight the second red candle. On the 1 minute time frame, we waited for the price to pull back into the zone within the hour. And about 50 minutes into the hour, we got that all-important moving average break. After 20 minutes, the trade closed at 1311. And the price dropped exactly 241 points from our entry, and we ended up winning the trade in style. If you've made it this far into the video, congratulations, because I've got some valuable advice for you. Something my mate told me when he first showed me this strategy. It's super important, so make sure you stick around. So we've switched back over to TradingView just to let you know. Now, when highlighting a candle on the hourly time frame, you don't necessarily need to highlight a candle at the beginning of a swing. A matter of fact, you can actually highlight any candle that aligns with the trend, such as this one right here. Right here we have bullish market structure with the price creating higher highs and higher lows. Now you can highlight any bullish candle in a swing high. As you can see right here, we have a swing high, which means you can highlight any one of these bullish candles. In a swing high, the more candles that form and the higher it climbs, the more likely that reversal will occur. This lowers your chances of finding a high quality setup because at some point the price will reverse in the opposite direction. This makes trading any old candle in a swing high far riskier than looking for setups at the beginning of a swing. That's why when starting out with this strategy, it's highly recommended that you identify those 2 consecutive green candles to get in at the beginning of a potential swing high. This is a very low risk, high reward approach as you'll be able to identify some top buying opportunities. Now the same applies in a bearish market, just the opposite. In a downtrend, we can confirm that the price is forming lower lows and lower highs. You can highlight any of these bearish candles in a swing low. We've got a swing low right here, which means that we can highlight any one of these candles. Just like in a swing high, in a swing low, the more candles that form and the lower it drops, the more likely that reversal will occur. This lowers your chances of finding a high quality setup because at some point the price will reverse in the opposite direction and you just don't know when that will be. Because you guys are still new to this strategy, identifying those 2 consecutive red candles to get in at the beginning of a potential new swing low is the way to go. Once again, this is a very low risk, high reward approach. Once you guys gain enough confidence and experience with this strategy, and when you're comfortable using it, you can start to look for those riskier setups in the swing highs and lows because the exact same rules and fundamentals apply. For the time being, stick to the basics. When I say this strategy is the real deal, I mean it. I recorded raw, unedited footage to walk you through it step by step. No fancy edits, just pure authenticity. Now, my friend asked me to keep things confidential. No names, no details about him. He prefers to stay under the radar, and I completely respect that. Honestly, I couldn't be prouder of this guy. He's managed to pull in over $80,000 in the last 2 years, and it's easy to see why. He's built a unique system that actually works. This is something completely new, never talked about in the binary options community, and he deserves all the credit for it. Huge respect for what he's created and accomplished. Guys, start using this strategy today. You'll see a huge difference in your trading and results. With the right effort and dedication, you could easily start making up to $100 a day. Stay patient, put in the work, and trust the process. Big things are coming your way. But yeah, I think we will wrap things up there. I hope you guys enjoyed the video, and if you did, go ahead and smash a like on the video and subscribe to the channel if you are new, and I will see you in the next video.